Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making a bunch of money, subscribe to the channel. Let me know if you guys have any questions or comments below. And if you like this content, give me a thumbs up. I'm going to go over market data, and I'll go over a couple of different topics today in this presentation. I call it market data, and give you some of my opinions on how this can be a little bit weird. I'm going to go over mortgage delinquencies, USD or the dollar, treasury yields, housing permits, real yields, and gold, and then some commodity prices. This is the mortgage delinquency rates by loan type. It's seasonally adjusted based on loan counts, excludes loans in foreclosure. So this is delinquent rates. And you can see we popped up here for that COVID shutdown. I don't know why they did that, but they did this huge COVID shutdown. And we are coming back a little bit. The problem here is that they're inventorying this problem on the side. And they're just like, oh, we'll just keep it over here. We'll inventory it. Will this all come on at once? Will it not? I'm not exactly sure. I don't know if all these are legit delinquencies or like people really can't pay it, or if they're just going to the forbearance to do it. I'm not 100% sure. But it is high and it could be a problem. So we need to monitor it. We got to see what they're going to do with it, the government that is, but they got their hands in this. Here's the dollar. The dollar broke its long-term uptrend line to the downside right here. And we've got another support line that it looks like it bounced off of. It kind of touched it and bounced off. So let's zoom in. This is a long-term support break. We are moving to the downside, but we do have a support line here. Short term, we do have looks like a bearish piercing or dark cloud cover, however you want to say it, which is a reversal pattern to move to the downside. How much? Not exactly sure. And remember, this is a short-term indicator. It looks like we have a little bit of maybe a trend line somewhere in here as well. So it's got this trend line there. So it's bouncing its head off this trend line. Then I don't know where it's going to go. If it's going to come all the way back, break to the downside, all the way down here, or if it's just going to bounce around sideways. We'll have to see what it does. But short term, it is looks like it's going to head lower. The U.S. Treasury yield, we're in this downtrend channel. We broke out to the downside, and then we broke right back into the channel pretty quick within this, I'd say within the year. And we're right there. Will this go up or will it go down? We'll have to look, short term here. We do have some sellers up here. You can see a wick, another top wick. Usually that means there's some sellers. We're going to head to the downside a little bit. It is coming down a little bit. We'll see how far it pulls back. Here's new private housing unit authorized by building permits. Obviously, this thing is going vertical here. So it looks like we're going to be building a lot more new homes coming up. Then we've got the Treasury Inflation Indexed Long-Term Average Yield. One thing I want to show here in relationship to gold, which is the next chart, we have a nice big downtrend right here. And in terms of the Treasury Inflation Indexed Long-Term Average Yield, down, 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 down to August 2020. We went sideways and then we headed back up. Looking at the gold chart and correlating this movement is from here in 2018 all the way up. So this is the inverse of the Treasury Inflation Index Long-Term Average Yield. So this is heading down, stopped at August 2020, and that's our August 2020 right here. And then we were going sideways. So it looks like these two correlate pretty well. What is this going to do here? Not exactly sure. I think it's going to head back down if they try holding rates down while we have inflation come. So this could be putting in a bottom here, hopefully. Hopefully it puts in a bottom. This is platinum. Looks like it's doing very well, moving to the upside, looking pretty good. Palladium looks like the opposite, which is what we expect during a commodities bull market, because palladium typically does opposite of the other metals. It looks like we're putting in this dome top coming through here. And it looks like it's going to roll over and head back lower, which is what we want. That's what we expect. Copper getting a little bit of a short-term pullback here. We do have a bullish piercing here. So it's kind of just setting down. The momentum's working its way off, and then we'll probably head on higher eventually. I don't think it's done consolidating or pulling back yet. We've got crude. Crude's looking pretty good. We've got the big 3 up days here, and then the small little contraction pullback. Probably going to go either down a little bit or up coming up. So that looks pretty good. But I do want to recap some of these things that I'm going over here. We have 10-year yields that are wanting to go to the upside higher. And I don't think the government can have them go much higher. I think it's going to become a problem in terms of interest payments, in terms of stocks and the economy wanting to go down with higher interest rates. So I think they're going to have to somewhat control those. Otherwise, we'll see a large crash. The housing market is strong, but we do know that there's problems inventoried on the side by the moratorium. And I don't know what that impact will be. I don't know what that impact will be. I don't know how many are going to come online. I don't know when. I don't know if anyone knows. But I don't like the fact that they're inventorying all of the problem where when they end whatever they're going to end, that it would all come at one time. That I don't like. We have strong pricing in commodities signaling inflation. So that's what we do have. Looking at copper, platinum, I mean, anything you really look at, they're all going up. We recently filled the accounts of a lot of people who don't necessarily need the money through stimulus. And what I think is going to happen is that vaccines going to be distributed, and they're going to open up the economy, and all these people have all this money, and they're just going to spend like heck. So I think a wave of inflation is going to come, and I think interest rates are definitely going to want to go higher. They want to go up. I also think that the S&P 500 and Dow could potentially move to the upside if we have all of this stimulus money and the economy open up, and there'll be a bunch of people spending a lot of money that have been kind of pent up in their house, wanting to go on vacations, wanting to go on, airplanes and whatnot to travel around. So I think there's a setup for a wave of inflation for the summer and onward. I really think that might be coming. And I don't know what the government's going to do or what the Treasury's going to do, or I should say the Federal Reserve, on holding yields lower. I don't know if they can hold it lower. I don't know if they can manipulate it. I'm not 100% sure. So in terms of manipulation, they're going to have to hold the rates down. They're going to have to hold precious metals down. They're going to have to make up some consumer price index number. They've got the moratorium on real estate. I don't know how they're going to control this inflation. I don't know how they're going to do all this. I think if inflation comes and interest rates go up, I think the stocks are going to come under pressure. It's going to be very interesting times to see what the heck goes on. And I think losing control is going to be high if they're trying to control all these things. So that's what I see. I think this is going to be a difficult time to navigate through because we do have a rush of people that are going to come online, which is going to be good for the economy. But at the same time, interest rates are going to want to go up. You're going to have inflation go up. It'll probably put in real negative yields. I think gold, precious metals, the commodities, I think will be a good spot to be in. I just don't know how they're going to control all this. I think they're going to lose control, and I think some sectors are going to come under pressure. Other sectors will do incredibly well. And it's going to be difficult to look at our leading indicators in real estate and all these other things when they are inventorying and hiding problems all over the place. So we'll see what happens. I'm bullish on commodities still. I got to see our leading indicators change. It's still, we've got the dollar going down, interest rates are going up, and gold has been kind of muted or paused at the moment. I do think it's going to head higher. So we'll see what happens. We'll continue to monitor this. We've got a lot of mixed signals. They're trying to control all these things. We'll see if they're successful at doing it. If you guys like this content, subscribe to the channel, give me a thumbs up, and thank you for listening. This is Finding Value.